Welcome to Lockbox Lunatics. We are here towards the end of November. I'm Chad Kamp down in Chandler, Arizona, with my trusty cohort in crime, Mr. Steve Lambert, up there in Washington. Hello, Steve.
Hello, how are you doing, man?
I'm surviving. Could be better, could be worse. You know how that goes.
100%, 100%. We're in our cold season, so have my sweatshirt on to stay warm. It's currently rainy and probably about 50 degrees and kind of gross out. Not
Mm,
Seattle weather though. We usually get yesterday was really pretty. So,
nice.
but we did get a little bit of rain over here in the high desert area. So, I understand you might be getting some rain.
They're claiming that we're gonna have a little bit of precipitation this weekend. So
How
we'll
often does that actually happen? When they
not
say there's
very
going to be some precipitation and then you're like, yeah, it's not happening.
Yeah. I would I've got a buddy that's in the National Weather Service, and I said, when you assign folks to the Phoenix area, like, do you look at the bottom of the barrel to say, hey, go there because all you gotta do is say it's gonna be dry and hot? Yeah,
Right? It reminds me of the father of the bride, right? Steve Martin.
yeah,
It's going to be
yes.
70, 70, 70, and it's going to be great, right? Yeah. So no doubt, right? How hard is that to call? Like, what if you were over in what is it like in over in the Middle East or whatever, like in Saudi Arabia, like every day it's got to be pretty much sunny or windy. I'm
Yeah.
guessing. I don't know. I mean, how hard is it to be a weathercaster there? I don't know.
You
I
just
agree with you, right?
you
It's not like the
record.
tricky places where you're like in Montana or something. You gotta like be like,
Yeah.
I don't know what's exactly happening right now.
You record three different sessions. I
Right.
would be 60 to 80, somewhere in that range. Beautiful skies, no rain. They're only going to be wrong like three times a year, right?
Right. Exactly. 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 Hey, speaking of being wrong, this
Right.
is going to be interesting. We're going to enter
Did
a little bit
Tammy
of a
call you
hot.
again? Did Tammy call you again?
Yeah,
Track you
yeah,
down?
right. She did. She called me
Okay,
and she said I
sorry.
was super wrong. I was super wrong. Exactly. I'm generally wrong about most things. Wait a minute. That didn't
Sorry.
sound right. Um, No, but a big controversial thing that some people that's got like there's not a lot of like middle ground. This is like either you're for or against. Is this
Right.
new deal about them saying, hey, we're going to look at 50-year mortgages to help specific home buyers, people in certain situations, be able to get into the home ownership game. And a lot of people are sitting there screaming and yelling, saying, oh my gosh, this is a horrible, horrible thing, and it's not going to be good. And then you got people on the other side saying, thank you. I've got student loans and debt and everything else. The extra couple $100s a month that I can get will help me with my DTI to be able to qualify for a loan.
Right.
And we got
Now,
to remember,
for those that don't understand its debt to income ratio, lenders look
oh,
at this from a qualifying perspective. Steve's talking like, there again, we're talking strictly to agents, but we're talking to everybody, Steve. Come on. So,
we are talking to everybody. Your debt to income ratio, known as DTI.
yeah.
And the cool part about this, the interesting thing was, if we go in the way back time machine, FDR, I think it wasn't it? Was it FDR or Roosevelt? Who?
Well,
One of
FDR
them.
is Roosevelt, but yeah, I'm pretty sure it was
Oh,
FDR.
sorry. Yeah, you're right. Oh my gosh. I need more coffee, clearly. In full defense, and Chad knows this, I was really under the weather yesterday, so I'm bouncing back, but
Right.
that was a
And it was
rough
at
one.
its head. It was a head cold from what I recall. So I had
It
a
was, yeah. Head
little
felt
bit
like it
of
was in a
smoke going
vice
there.
bubble. It was weird.
Right.
Um, but introduce the 30 year. And at that point in time, you did some research, and what did you find prior to that 30-year being released? What was typical?
So the average home buyer had to come in with 50% down and take on a 5 to 10 year mortgage. So just imagine back in the 30s, you're coming out,
Hmm.
you're in the depression or coming out of the depression because this was starting to be implemented in the 30s and it's
Hmm.
starting to take root in the 40s. But 50% down on a home, first time buyer,
Right?
first time buyers in today's market, they're struggling to come up with the 3.5% down for the FHA loan, right?
Oh, 100%. And people might say, "Oh, but Chad and Steve, look at houses were only $1,200 then, or maybe $800." It's all relative, folks. It's all relative because you might have been making 3.5 cents an hour for work. I
Right.
mean, that was a thing. There was a difference where your take home for the month might have been $40. So it's all relative when you think about it. And so that introducing that was controversial at the time, but then look at now how it's just super normal for us, right? Oh, 30-year mortgage, totally normal. And at that time, I guarantee you people were up in arms about a 30-year mortgage, right? This is a terrible thing. It's going to do this, it's going to do that. The pros and cons. Are you paying more in interest on a 50 year? You betcha. Are you getting your equity reduced? No, you're front loading that. You're paying massive, you're basically almost interest only payments, right? For a while.
Right.
So if you're looking to be somebody that's going to plan on moving a lot, not a great thing, or you refinance it fairly quickly, use it to get in, get yourself stabilized in your job, and then refinance pretty fast. It could be used as a vehicle for somebody to be able to get into a home initially and then make some adjustments if they get a better job or some lifestyle things happen or whatever it is, or they're planning on getting promoted at work or whatever they may be doing to where they get that more financial stability, right? And then they can go ahead and change. Um, Obviously, that's the big catch is though, you're going to have to stay in the house for a while, but it's also going to create potentially assumable opportunities for people as well.
Right.
You know, I don't
And,
know.
and well, what's interesting is, right now they came out recently with a study that the average first-time home buyer has increased their age to 40. So just imagine, a 50-year mortgage, paying off at 90. And there's
Yeah.
all these strategies that you can utilize to accelerate, when that payment is going to be made, right? So
Right.
from a conservative perspective, you commit to a lower monthly payment, but from a strategy perspective, you want to start socking on additional payments on that to help reduce the length of time that it's going to take you to pay that mortgage off. So right now, if you have a traditional 30 year, if you want to take 5 years or so off, you make one extra payment a year and you take about 5 years off, the repayment of that mortgage. So now you're down to the 25. Same concept with the 50 year, right? So if you just want to be able to get your foot into the real estate market, you can go ahead and obtain a mortgage for 50 years. Obviously, I'm going to be the first one to tell you, what, get that thing paid off as quickly as possible. Start accelerating those payments. And if it makes sense with a refinance option to a 30 year or 20 year or 15 year, go ahead and do that at that point in time in 5, 10 years, and then you'll be able to accelerate that and start saving, interest payments. But no, I'm with you 100%, where I know there's camps out there beating the drum saying this is a horrible thing, right? Then you've got other individuals saying that we're having such an issue with the affordability housing that we've got to be able to
Right.
do something to let people go ahead and come into that, that American dream of being a homeowner.
Exactly. And I think it does allow for it's an option, right? Is it the best option for everybody? Absolutely not. Is a 30-year option the best for everybody? Absolutely not. 15 might be better. An arm, an interest only. There's a lot of different situations where we can see where it could be beneficial, right? And like I
Right.
said, it's not necessarily for everybody. So here's an interesting thing. Just a quick little Google it. How long does a U.S. homeowner stay in their home on average? The average U.S. homeowner stays in their home for about 11.8 to 11.9 years. So this has decreased from a peak that was in 2020. Home ownership tenure has increased significantly compared to 2005, though, which was 6.5 years.
Right.
I think now it's staying longer because of people being in their homes with those super low interest rates, right? They're like, I'm not moving, right? Like, forget that. 2006, 7, I could see a lot of things happening at that time frame. But right now, I could see it increasing because people do want to stay in there because of the lower interest rates that they got. But the interesting thing is that about 39 to 40% of people pay off their 30-year mortgage. Those aged 40 or 50 and under, not only about 28%, those 65 and over have the majority of theirs paid off, right? Because they spend most of their time. But here's the thing, that percentage is that's one percentage of a 30-year mortgage, but then you look at the average person doesn't stay in their house but 11 years. And that's the
Business.
longer that's the longest it's been in a while,
Right.
which tells you a 10-10 arm is great.
Right. Right.
I mean, you know what I mean? If we're looking at just pure numbers and running the stats here, it's interesting. So for a majority of Americans, a 50-year is just a placeholder. If you're going to be in your house 11 years on average, it's a placeholder. You're getting a little baby tax write-off, sure. Nothing significant enough to make it necessarily, I mean, to want to go for that. Like you said, it's going to be a very specific type person and situation where this will come into play. But the fact of the matter is, it's an option. And let's say that's an option for 2% of the overall market. How many millions of homes get sold? That's a pretty big number of people that are going to now be able to get into the home ownership game that have been excluded from it, right? And that's where I
Right.
feel it has a place. Financially, probably not the best overall decision. You kind of want to pay things off a little sooner and get some equity, but it has a place. I think it's pretty cool.
Well, what really drove the transition from a 5 to 10 year mortgage to a 30-year mortgage is individuals were having a difficult time paying it off in those 5 to 10 years.
Hmm.
And so, if we extend that time period from 30 years, you've got people that are having a difficult time paying it off for 30 years, right?
Hmm.
Realistically, it's a in my opinion, I think it can be a great strategy if you're disciplined. Okay. WAMU used to
Mm.
have, from an investor's perspective, I'm going to go ahead and switch gears to an investment
Yeah,
scenario.
yeah,
WAMU, Washington Mutual, back when they existed, they had a great loan
yeah.
program for investors. It was basically pick your payment. You had four options. You could pay
Hmm.
15-year, 30-year, interest only, or negative AM, right? And
Hmm.
so if you were a season and or an investor that had the ability to have that self-control,
Yeah,
when you had tenants in place, it was a great option. You accelerate your payments to the 15-year mortgage. When you had the vacancy rate, then you go ahead and you drop it down to an interest only or the negative AM or whatever you're
yep,
up for. Especially if you had a multifamily unit, if you had two or three, you can go ahead and make adjustments, and those would be available. You still had to pay the property off in 30 years, right? But
yeah.
I saw a lot of folks utilize that successfully, and I saw some folks utilize that and they weren't so good because they were so worried about just having positive cash flow. They
Yeah.
never made sure that they transitioned back to some of those
Hmm.
15, 30-year payments because, as time went along and you utilize that negative AM and interest only payment, those options were no longer available to you because it wasn't going to get the home paid off and
In
30.
time, yeah. I think it'd be really cool if we were able to have something like that back in play with, like you said, guardrails, right?
Right.
Guardrails in place, like saying, hey, if you use this, we want to let you know very clearly this is what this is looking like, and you can only use it for a specific amount of time, or something like that. And I know mortgage companies now, they have situations where you can call in and tell them if you've had a loss of a job or something like that, or whatever it looks like, right? Where you can sit there and say, hey, like I need a reprieve on this or whatever. And they'll work with you nine times
Right.
out of 10, right? But how
Well,
cool would it be if you could
what
just go online and just check your box into your account, just make a quick change, and maybe it's for 6 months, right? And that
right.
pops you back in.
Yeah, and what really drove that loan modification requirement was, the fiasco back in 2008, right? So,
Hmm.
banks weren't working. The feds came in. It's like, hey, you guys got to start getting a little bit more flexible and working with the consumer, because banks were just foreclosing. The short sale process back then, oh my goodness, was just a nightmare trying to
Hmm.
trying to sell properties. The market tanked, people were underwater, and just the process for either the loan mods were horrible, horrendous, and there was no consideration that some of these larger banks were doing. And that's when the Fed stepped in and said, no, you guys need to accelerate the short sale or streamline that process. And you also need to start working with consumers a little bit better. And so most of the banks came out and, did a great job of making some adjustments.
Hmm.
Yeah, no, from the average consumer and not from an inspector or a investor perspective, I think the refi needs to go a little bit smoother process, as well.
Yeah.
Yeah, because you've got folks that are making a payment and they're wanting to make an adjustment to either reduce their rate or reduce their monthly, their monthly outgo. It's pretty much a no-brainer. If they've been making their mortgage payment that's either equivalent or lower, or equivalent or a little bit higher to what they're going to be refinancing, that should be a rubber stamp for most lenders.
Oh,
And
you'd think 100%, right?
yeah, and I honestly, I just recently saw where somebody was trying to do a refinance, and all they were trying to do was move some money around, and they've been making their mortgage payment, and the lender is just giving them a hassle. It's like, I'm not,
Really?
yeah, I'm not asking, we're not asking to increase our DTI, we're not asking to increase, but it was for whatever reason,
Yeah.
since it was a refinance, the bank
Interesting.
the bank was being difficult with them. I don't know. I don't remember whether they've successfully finished that process or not. But the banks, whenever you talk about common sense and banks, they're typically not in the same sentence.
It doesn't always go in the same sense. You know, an assumption that everybody's making too on everything that I've read about this 50-year mortgage, the one assumption that everybody's making, and this could be an interesting flip to this, we're all assuming it's going to be a higher interest rate.
Oh yeah,
So on a 50-year, because it is so heavily biased to interest payments up front, what if the banks go in a different direction, still collecting a massive amount of interest, but they do it at 4%,
Right.
3.9?
Yeah. Because they're guaranteed, well, I wouldn't say they're guaranteed the income, but from a risk
They're getting.
perspective, they're looking
Mhm.
at the risk to begin with, and that's going to be a guaranteed monthly, income for them.
It is, and they're getting, the biggest thing is because it's so front loaded, because all that interest comes onto it for such a long period of time, they can afford to discount that percentage rate because they're getting so much interest money back. It's a
Right.
very interesting proposition, and I think that the banks, I think it'll be interesting to see, because somebody could flip this script on its head that everybody's thinking about by coming in at a lower interest rate.
Yeah.
In which
But
case now the payment's a $500 or $600 a month difference.
right. Well,
And so where a homeowner is getting some equity versus rent where they're getting no equity, right? They're at least getting potentially a little bit, right? And so there is a benefit there now.
no, there definitely is. The other side of the coin too is qualifying. FHA came out and recently said that they're dropping the minimum requirement for FICO scores for certain
Hmm.
for certain buyers. And there's a lot of in my opinion, there's a lot of misinformation out there about it, because
Uh-huh.
I've heard some individuals recite that, oh, you can qualify. Well, no, it's on a case by case basis, right?
Right? Yeah.
Just because you can fog up a mirror doesn't mean that the bank thinks
That,
you're a worthy
getting you a loan,
credit.
right? Yeah, no,
Right,
100%.
right,
It's so true though. And what I like is that this idea of a 50 years, at least having getting the conversation started about a home affordability, because it's been a rough year. We had such big growth in 21, 22, right? Where prices went, 30, 40% higher. Interest rates at that time allowed people to afford that. Then but then we changed the algorithm, right? We cranked with interest rates went up, but the house prices kind of stayed stagnant, right? We are getting closer to that equilibrium, but prices are still really out of reach for a lot of people, right? Because people's what they're getting paid has gone up, but not at the same pace as housing, right? And so um, you know, buyer expectations have changed, and this may help. Like these longer options may help bridge that gap a little bit to where we can see people getting more of what they want at a price they can afford. So it may help jog things around a little bit in the market and help it kind of move a little bit quicker. But um yeah, I'm fascinated by this stuff. I think it'll be really interesting to see what this shapes out at. I'd be blown away if they come out and they're like, "Yep, hey, we got a 50-year at 3.9%."
correct.
That will absolutely blow up. And are all of our fears and worries the same as what they were when they came out with the original 30-year mortgage, way back in the day, and everybody was probably wondering like, this can't be great. Is
Right.
that the same thing?
Right. If you look at the automobile industry, right?
Hmm.
So at one point in time, not too long ago, you could only get a loan for 5 years on a new vehicle. Now they've
That's
extended
true.
now they've extended that to 8 years. But what has the financing done for the 8-year loan? Generally, your interest rate's a smidge higher,
Hmm. Yeah.
right? And so, I wonder if that could have
Yeah.
the trend from the mortgage perspective from the rest. Now, I understand automobiles is a depreciating asset, right? I don't even think it's an asset,
Right.
really, but it's depreciating. Where
It's
a home,
it's a money it's a money spend. You
it
just
is.
buy it. It is
I
what it
mean,
is.
unless if you're into, some of those cars that we see on the
Oh, like
different
the
cars that,
exotics or something. Sure. Yeah.
right, right. So some of those old ones, that's Barrett car auction, right? But outside of that, your normal everyday drivers, it's a depreciating item. There's a reason they sell gap insurance, right?
Oh gosh, 100%, right? 22% of new car buyers in the US use an 84-month loan. Record high.
Yeah,
That's
yeah.
November 2025.
And so, if the mortgage industry follows that rate as well, now there again, buying a home, that's an asset and that's an appreciating asset. But what we as agents try to do is put our clients into the best position to be able to realize that
Hmm.
appreciation and to have some sort
Hmm.
of asset to either pass on or utilize for a step up position, right? To be able to
And
step up.
this does hurt the equity position.
It does.
Because if you buy a house and in 7 years it goes down
Oh yeah.
20 grand, 30 grand, and it stays there for another 10 years, you're there's no way you're coming out of that with any type of, you're in a, depending on what you put down, that's a tough one, depending on what you put down. But you could truly come out in a bad, you could be in not a great spot, right? So
Yeah.
again, similar, like I love the car example. It's similar to that. Well, maybe you got into a car for a great price, but 2 to 3 years down the road, you're so upside down in that loan.
Right.
I mean, if you're gonna do an 84-month loan, try and at least, I don't know. I don't think you could do it on you. That's probably why they don't do it on used cars.
Yeah. Yeah.
I
No
mean,
doubt.
unless it's like 1 or 2 years old, I guess maybe they do on like newer used, um, but yeah, it's the same idea. Is it right? It's not right for everybody. And it sounds like about 1/5 of all car buyers are choosing that option. So for those people that need that option, it works for them, right? And maybe they're going to drive it till the wheels fall off and they don't care. Or like you said, they're just going to pay it off at some point. They're going to go, I've been driving it for 2 or 3 years. I'm just going to pay. I got a lump sum of cash coming in down the road in 2 or 3 years, or maybe they work on commissions or whatever it is, or bonuses, and they're like, I'm gonna have a big chunk of cash coming in. This will get me in the door, and then I'm gonna chunk this thing down, or I'll refi it, or I'll change it out. So I mean,
Right.
like you said, it could just be simply something that opens the door for people.
No, and it could be. And homes, historically speaking, there's always been appreciation. Even during the Great Depression, homes saw
Hmm.
a very small appreciation, year over year, on
Yeah,
average, right? But still, homes are always going to continue to appreciate. Inflation's always seeming to rise. If you look
yeah.
back the last 50, 100 year, 200, 300 years, right? So, owning a home is the best, still, in my opinion, the best wealth builder and opportunity for the average American to be able to start building up a nest egg and have something to pass down to future generations, right?
Oh yeah, there's so many countries out there where houses are so unaffordable overall. It is a great tool that we are fortunate to have access to be able to, like you said, it creates a stable place for people to, stability creates more success, if you will,
Right.
right? It gives them a place to, like a sense of that home, that sense of home, that pride and ownership and things like that. And the ability to, if you're savvy about it, to say, okay, well, I don't own my home outright, but I have 50% equity. I'm going to refinance this, do a little equity suck. I'm going to take some of that money out. I'm going to go buy a smaller property and I'm going to turn it into an investment and start and have a rental property.
Right.
It allows them to leverage money to create opportunities, right? And so whether that's a interest only, a 15-year note, 30-year note, 50-year note, whatever it is, adjustable rate, interest only, however you want to do that. There's a lot of ways for people to utilize the products that we have available to create, like you said, a pathway to wealth. That is something that you're going to do every month, whether it's paying rent or paying a mortgage. You're paying something to provide shelter for yourself. Might as well invest it in yourself. And again, I see
Exactly.
this 50-year as just another tool in the toolbox. Is it the end all be all? Nope. Is it the magic bullet, magic answer for all these other things? No. But for specific situations, it has a place.
Yeah, yeah, and that's why it's so imperative that the average home buyer aligns themselves with someone who's going to be honest with them, right?
Yep.
And
Yeah.
look at their scenario and say, okay, this may or may not be the best idea for you. I took a listing recently. The owner called me up, couple nights ago. It's like, hey, look, we're looking to source our down payment for the new home. It's either going to be we're going to do a HELOC or we're going to go ahead and pull money out of the retirement fund. And so after we talked about it, I said, look, this is reality from a HELOC. This is reality from pulling it from your retirement. They made a decision where to pull it from is going to be the most beneficial to them.
Yeah.
Of course, you're going to have folks that are always going to tell you that you should. Why don't you just do this? Well,
Right.
and so Mike, and the discussion that she and I had was, well, people are telling me I should just do this. And I said, okay, how much time did they really invest in looking at your current situation and seeing what you're
Hmm.
trying to accomplish? And like, well,
Right.
this was just an off the cuff comment they made, and I just heard it from more than one person. It's like, okay, no, I understand that there could be some
Yeah.
validity to it, but let's actually dive deeper into your personal situation and see what's going to be best for you. and
Yeah.
most cost effective in the long run. So she came up with that game plan. But I know we're coming up. We don't want to come up on a 50-year podcast, So I think
Yeah.
we need to, I
That's
think
right.
I think
Gotta
we're
let people go. Gotta let people get back to their whatever it is they're doing, man.
yeah, yeah. And no, so I mean, it's a great, interesting topic. I love talking about this kind of stuff. And so for those of you that are tuned in, hey, thank you so much for your time that you've invested in us. Hopefully you understand we're trying to invest in you as well. Go ahead and like
Yes.
and subscribe. And if you'd also have any questions and or any type of content that you'd like us to create, by all means, put that in the comment section or even reach out directly to Steve or myself. So again, appreciate your folks' time, and we'll catch you next week.
Awesome. See y'all later.